Hey, hey, what's up, good people? Back before you again. You already know, hit that like, subscribe, and notification bell, and let's get right into it. All right, good people. I made a crypto video. It will appear here. It was the video that I made earlier today, and today right now I want to talk about the actual stock market and things we need to look out for. We know that Fed Jerome Powell will be speaking at Jackson Hole this Friday. The SEC was there today and made some crypto statement as far as stable coins are concerned, but that's going to be in the video that's going to appear in your upper right hand corner. At the end of this video, I suggest you watch it. So I'm going to start out with a saying that there is a lot of talk of what's to come. So let me paint this picture for you. There is a lot that is going on. A lot of you know that's been watching me. I have been saying that I expected a turn down in August. Not next August, this August. And it's here. There's always something to help it, come down, right? Just like in the crypto market, there's always something, some major exchange causes crypto winter. It's the same thing. So what I'm saying to you guys is it's not over. There's more chop all the way until September. Now, one of the good things that could be happening right now is that we front end all of the pullback. Okay. So now I want you to listen to this gentleman because I agree with him and it's exactly what I've been saying. So now there is a new Fed that the president wants to get rid of because of some housing scandal. Okay. And let me find that for you because there's a lot of things that's taken place where the president is lining his people up, right? And if he lines his people up in the office of the Fed, to be Fed governors, then he has power over the Federal Reserve, right? So look at this. Trump says a federal governor, Lisa Cook, must resign after, look at that, mortgage fraud. That's what they're accusing her of right now, mortgage fraud. All right. And so he says she's got to go, right? Right. You're just guilty. Got to go. But this gives him power to appoint now two governor and the Fed chair because Fed Jerome Powell, this is his last year. And so that's one of the things that is going on. Now, I will tell you what I think is happening right off the bat. Whenever the president threatens a Fed member or whatever, she may be guilty as sin, she may be innocent, I don't know. But the onset of that is negative. Just like when the president was saying he was going to fire Fed Jerome Powell, the market tanked, right? But the other side of that is the market will get over that. And then if the market sees that it's going to be someone dovish, then the market may like that because it's going to lead to lower interest rates. Okay. So let's just quickly go through these windows right quick. Look at this. Let's go. Yeah, NASDAQ and S&P in lower as investors sell tech. Look at that. Buy less pricier sectors. So that's one of the things that I want you guys to watch out for. So this always happens. Now, there is some selling of big tech and big tech is selling off, right? Let's just call it what it is. Let's take a look, right? I want to show you guys something, but I want you to beware of something also, all right? So you see NVIDIA, right? Sold off, especially over the last 5 days. You see that, right? So as you can see here at the bottom, these prices change too. See that? So we can look at NVIDIA, Tesla, and Apple all together, right? So over the last week, right, we have Tesla down 3%, Apple down, Microsoft, right? And we have the S&P 500 down. Look at that. And so if we go out a month, look at that, how it changes. You see here, Microsoft is down by, let's call that 1%, Tesla down 1%, and NVIDIA up to 0.35% in a month. So There is all of these reports that people are selling big tech, and they are, but someone's going to be buying big tech. So what I'm saying to you is anything I say is not a suggestion for you to buy, hold, or sell, but I'm holding my big tech and I'm waiting for a buy. Now, if we continue down, big tech is going to get hit, but what's going to get hit even more are the small cap AI companies, right? Those are the ones that's going to get smacked. Look at this. Now, I have some quantum computing, and they are getting absolutely, I got it on the 5-day, they are getting absolutely smacked down. So SoundHound is down 22% in the last 5 days. Look at that. D-Wave, 18%. Rigetti, 11%. These are buy zones for me. I like these right here. And I don't expect them to be green tomorrow. So you could see here, quantum computing is down 6.49%, even on the day. All right, I have a point to make here. You see SoundHound is absolutely tanking, right? These are the areas where I actually dip buy. And when I don't mean dip buy, I mean it dipped and I bought. Dip, buy, follow. So that's one of the things I want to keep on your radar when others are running. There's some opportunities out there, okay? So now Powell faces economic crossroads in Jackson Hole's speech. So he does. He's in a very tight space because this man is thinking about his legacy. And I've been saying this. What's important to him is he does not want high inflation to be his last fight. It's like Ali in the ring. It's like Michael Jordan on the court. You want to go out because the last thing you do is going to stamp your legacy. Listen to this.
The real risk to the economy is rampant inflation. We just had another spending bill, right? So again, fiscal policy is going to be goosing of the economy, which is the same thing that happened, sort of the last administration, which, again, if you look at some of the spending that went on an IRA, like the Fed is reacting to the fact that you're going to get an economic boost from fiscal spend, in my opinion. I also think he's at the end of his term, right? He's leaving in May.
So what are you going to do to me now?
What's his legacy going to be? Is his legacy going to be the guy that led inflation back in the room? I don't think so. I think he's obsessed with not wanting to be the guy who did that. I ask people all the time, like, who was the Fed chair before Paul Volcker? Does anyone know? And most people are like, no. I'm like, right, because that guy did a terrible job.
So he's talking about what he thinks the Fed is going to do or not going to do. But I agree with him. He's thinking about his legacy, and he's not going to be bullied. I think that the president would have did a better job by really just trying to work with him, right? And I know some of you guys are going to say, yeah, but he wouldn't work with the president. Everybody doesn't fall for the same tactics. This is just what I think. So now let me show you guys this, okay? Let me show you guys this. August, I want you guys to see this. The red represents since 1896. Okay, that's this game is old. And the green represents since 1990. Clearly you can see after February, right? What are the worst months? August and September. And the first 2 weeks in September, like I've been telling you guys, are going to be some of the choppiest if we don't get all of the chop here first. Now, since 1990, which is more current, let's look at the green. We could see that August and September. So September is actually traditionally a worse month than August. But sometimes when you get a big fall off in August, sometimes September is fine. Now, remember, this is just historically. That does not mean it's going to take place like that. So please don't come back and say, Larry, you said, well, I said we're going to have chop in August, and here we are. All right. So I also want to show you something else I found. These are average returns on the S&P 500 for the week. So actually, Wednesday is the best day for returns out of a 5-day week, all right, when the market is open, followed by Friday. Now, in the options market, we know that it's Monday and then Friday, and I try to stay away Wednesday, but I'm going to try to start doing some options on Wednesday, all right? So we got Wednesday being one of the best days for returns. So, Larry, what's your purpose in making this video? My purpose in making this video is if you see this and understand this, then there's money to be made and a lot of money to be made. So my point is Larry is doing some buying here in August, and I got some more cash that I'm going to hold. I'm not going to give all my cash to August. I'm going to save some love for September, and I'm going to buy more in September because, when October and November comes along, then that's when we are going to laugh together, you and I and everybody in Money Moves at the bank. We're going to have the party at the bank. That's where it's going to be. All right, good people. So I think I covered everything. Also, too, the Fed minutes came out. I want you guys to listen to this also.
A majority, they say, of participants judge the upside risk to inflation as the greater of the two risks. Remember, it's inflation versus jobs for the Fed. Several participants, however, viewed the two risks as roughly balanced, and a couple of participants considered downside risk to employment to be the more salient risk. So choose your own adventure here on the Fed in terms of what's the biggest threat out there. In terms of the fundamentals, they say inflation somewhat above the 2% goal, unemployment rate remains low, employment at or near estimates of maximum employment. Remember, this is before that big jobs revision that we saw a little bit after this meeting in July. Uncertainty about economic outlook remains elevated here, and some participants mentioned indicators could suggest a softening in labor demand. So maybe they saw some of that data that indicated the revisions were on their way. The Fed also said they expect inflation to increase in the near term. Tariff effects, they say, are becoming more apparent. They say a few participants note that tariff-related factors could lead to stubbornly elevated inflation. And they say that evidence suggests that domestic businesses, consumers, are predominantly bearing the tariff costs. Now, that puts the Fed at odds with the White House, which has said that the tariff costs are being absorbed by foreign countries. The Fed here saying evidence suggests that domestic businesses and consumers are the ones predominantly bearing those costs. Also,
so if you listen to the Fed speak this Friday in 2 days at Jackson Hole, and he starts to talk about these data points, talking about tariffs and increase in pricing and retailers passing that on to the consumer, that's going to be negative for the stock market, good people, and we can just get ready for another dip. Now, the dips that we've been having is the market guessing that the Fed is going to be hawkish, and that's why we have these dips. Remember, the stock market is forward looking, right? And it's reading the tea leaves and it's seeing a potentially hawkish Fed, and it is pricing it in now. Now, one of two things: either these dips or the pricing in will be a good thing or it'll be a bad thing. And the bad thing is we have a continued sell-off on Friday. So hopefully some of the dip buying I did, I know in the long term it's going to be good. It's going to be positive. But I want to see a reprise on Friday. Now, no one knows but the Fed and a few other people what he's going to actually say. The only thing I don't like about Jackson Hole is he gets comfortable because it's not an official meeting and he talks a lot. Now, that's fine when you're not moving markets. But if you've watched an FOMC meeting, you know the longer he talks, the more the market dips. So let's keep our eyes and ears open for what's to come. Meanwhile, if you want to make money in all of this, come join us at Money Moves, where we make money moves every day. We buy when others are fearful, and we sell when others are greedy. All right? Warren Buffett. All right, we'll see you guys tomorrow. Live, love, laugh, and learn.